Lawrence Summers, former US Treasury Secretary, said, "The world is sleepwalking towards doom on climate change." Alok Sharma, president of COP26, said, "Climate change is a great leveler that does not recognize borders. It is crucial to mobilize both public and private capital towards renewable energy investment." On the other hand, Jeff Curry, global head of Goldman Sachs Commodities Research, yesterday said, "The current energy crisis is the revenge of the old economy on the new economy. The new economy is overinvested and the old economy is significantly underinvested." So I thought we could start with your reactions to that last statement. Do you agree that the new economy, being traditional renewable energy through solar, through wind technologies, has been overinvested? Did we invest too much capacity in renewable energy too soon? And I'll start with Suresh, given your investment in one of the largest blade manufacturers for wind turbines in China, just to start with your reaction to that.
Thank you, Maral. Oh, I didn't think I was going to be able to talk my book from the start of the panel, but well, obviously we don't believe that to be the case. I mean, if you look at overall investment in renewables, everyone knows the statistics. At the moment, what is it, a third of world installed capacity is from renewables. So the current crisis which we're experiencing, and I'm certainly someone who suffers from that, being based in the UK, is something that perhaps is temporary, perhaps is a supply-demand imbalance, but overall, my view and our team's view, our business's view is that there has not been enough investment yet in renewables, and there's a huge number of opportunities ahead of us. And these temporary blips that we see, I don't see quite the same way as the gentleman you just quoted.
And Manoj, I'm going to jump to you, because I know you're also a passionate oil investor. Do you agree with that statement?
Well, firstly, I just want to let everyone know that I'm very happy that we are all here. I'd like to thank Raha and her entire team and Zach for a phenomenal conference. It's nice to see some old faces and meet some new ones too. I will tell you that what's interesting today, listening to Nouriel as well, is we have underinvested in the old industry, so to speak. So right now there is a severe pressure on current pricing, and I just urge everyone to just take a step back and look at the general macro. We're at 7.5 billion people today. By 2035, we're going to be at 8.5 or 9 billion. You have 6 basic human needs: energy, food, water, infrastructure, healthcare, education. I leave alcohol and sex to the side. These are the 6 basic human needs. And therefore, energy is something which is in demand across the entire spectrum. Energy transition is not a switch, it's a process, it takes time. And you need to let the investments continue in the renewable without killing the old industry, because there needs to be a catch-up period, and unless we want to see oil hitting 120, 130 bucks, which will happen if we continue at the current pace.
Yeah. And I think one of the key things here is, and I think agreeing with Manoj, it's there's a disconnect between the speed at which we think the energy transition will happen and the way we scale down investments. Because under a lot of public pressure, there has been changes, if you look at all the big IOCs, and also even some of the NOCs, significant reductions in exploration spend, significant reduction in CapEx, and really, we still need a lot of oil and gas.
Absolutely.
And it doesn't mean that the energy transition won't happen. I'm a clear believer in that, but it takes time. And I know that's politically not necessarily acceptable, but it is a transition. It's an evolution, not a revolution. And it will take years to come. And I think that's where we still see a tremendous opportunity also from an investment perspective in oil and gas. And what you see is the space is filled where the IOCs step out. It's filled by independents. It's about private equity funds. It's a different kind of oil and gas company altogether. But there is an opportunity. And I'm not saying reduce the spend on renewables, but it needs to be balanced.
So it sounds to me like a question of, it's not a question of flow. There has been capital flowing into renewable capacity development. There hasn't necessarily been enough into the old economy. But then from an investment perspective, what kind of hurdle rates are we looking at today compared to 10 years ago? Because as we all know, the cost of producing renewable energy has come down significantly. The price of a barrel of oil is now a lot less than it was 6 years ago. Where does oil need to be to incentivize me as an investor to invest in CapEx in the old economy? And where are we on the other end of the spectrum when it comes to solar and wind? Go ahead, Bart.
Perhaps if I start,
So
then,
I think-
or you, Manoj, go
Go
ahead.
on, Bart.
Now, what I wanted to say is the investments that are needed, and if you think about oil and gas, it's not, unfortunately, not only a financial decision right now. It's also a political, social, emotional decision. It's, if you look at about 60% of the funds under management globally, if you look at their ESG statements, they won't invest in oil and gas. They just said it. So there's actually, as a result, a lot of room for kind of a different kind of investor that sees oil and gas as not as a transition investment. It means that you will invest in different projects. The big ones, like the Arctics, the deep seas, those will disappear. But particularly the more traditional ones onshore, there's a tremendous potential still in the market.
Manoj, you wanted
I think what is very interesting, Maral, is that you're seeing a significant abundance of capital chasing green renewable energy, whereby they're actually, in my view, pushing the value proposition down. And whereas you have a significantly less amount of capital chasing the old industry, which is pushing the price up. So if one were to just sit there and just balance this out and say, look, we're going to actually put a 50% allocation towards old and new and let it come gradually, I think you could have a blended return. Now, ESG is a buzzword which we've heard all day. We hear it every day. And as one of the panelists said earlier, I don't know of any company that has received a negative ESG report, which is so funny. I mean, Exxon has a phenomenal ESG report, which is great. But that means health, safety, environment issues are being catered for. And I think that all needs to be priced in. So it's about allocation, which leads to pricing. That's how we see it.
I mean, I think from our perspective, it really comes down to a more philosophical point, which is, what is your mission at the end of the day? Is it to help, for example, overall energy needs be met in a responsible way? Is it that you exist because you want to further the development of renewable energies, or do you want to be opportunistic and go into markets where there are opportunities right now? Speaking for myself and for what we do, we're looking at trying to, when we do invest in renewables, it's in the sectors that make sense at the moment. And as you said, as costs are coming down, yes, there's more capital chasing deals. There are also other I know we'll talk about it a little later, but new technologies, new supply chains, new value chains that are starting to develop, which didn't exist 10 years ago. And so those themselves provide attractive opportunities even today in the here and now for investors. So I can't give you a number as to what price oil should be or what the levelized cost of electricity from solar should be, but I can say that those opportunities are evolving in the renewable space, and they actually are very attractive even in the current market, in my view.
Okay, so if we can't pin down a hurdle rate or a number to work with, forgive me, I'm a numbers person, then how long does my investment horizon need to be as an investor to find an attractive proposition in the renewable space? Do I need to be thinking 10 years plus? Do I need to be thinking 20 years plus? How do you deal with that challenge from an investment point of view?
I'm a numbers person too, as anyone would tell you. So perhaps I was being facetious with my answer before. I mean, numbers do matter and hurdle rates do matter, and I think it's driven by your risk appetite and what kind of money you're managing. And of course into that comes a time horizon as well. So I don't believe, and I haven't seen personally, maybe other people have, I haven't seen a change in hurdle rates from investors saying, oh, because you're investing in renewable energies and there's, let's call it a moral component to it, therefore I'm willing to accept a lower rate of return. That's absolutely not the case. Returns expectations are still high depending on where you are on the risk spectrum, whether you're venture capital, private credit, real assets. There's a difference in return expectations, just as there was 10 years ago, 20 years ago, 30 years ago. So that hasn't changed as far as I'm concerned. It really depends on where the opportunities are, what kind of money you have, and the patience that you have. But as we hopefully will talk about a little later, when it comes to new technologies, my view is you have to have a much longer term horizon than perhaps was the case 10 years ago, because there are so many technological challenges ahead of us in solving this issue of greenhouse emissions or gas emissions.
And Bart, I'm just going to ask you a question following on from that, because I know you've spent a lot of time in your career advising large corporates who have been very commodity focused or in the oil and gas and infrastructure sectors. How are decisions made at corporate level about the allocation of capital? If you've got a publicly listed company versus a privately listed company, and how do they view the hurdle rate versus investment horizon debate? Do they particularly care about being good people in the world and making it a greener place?
It depends on who you ask. I think, I spend a lot of time specifically working with Shell, and if you look at them, when in the old days they made a trade-off, they had a fantastic scenario planning, forecasting team, and they would basically look at capital investment and what do you put in, what do you cash-wise get out. About 5 years ago, they changed that and they added net carbon footprint as another criteria to assess their portfolio. But they also do something else, which is they're extremely conservative. So when you look at a lot of these guys, when they model, they have something which they call minimizing maximum regret, which is really about how do you make sure that you're not betting the company. And I think you see the same thing happening here in the region, because if you think about some of the large NOCs here, their mandate is not to make short-term gains for shareholders. It's about how do I create long-term value to society. And that's a very different mandate, and as a result, they behave a bit more traditional. They don't necessarily jump as quickly on new technologies, new energies as some of the other ones do. So, but one of the things that we've seen is that over the last, and now the oil price is up, it's a bit different again, but when the oil price went down, suddenly investing in renewables was, for a company like Shell and some of the others, actually kind of comparable to investing in oil and gas. And that was new. Before that was never the case. So you do see, what I wanted to say is it's a certain conservatism, and you do see them make very clear trade-offs, also driven by, and you mentioned the word ESG, but also like public standards. If you take them as an example, they lost a court case in the Netherlands because their green plans were not aggressive enough. So you do see that pressure added to just only the financial analysis.
And Manoj, just building on that point, I know you look at various sectors and you define returns slightly differently than others, right? So you've got the financial return, you've got the being a good citizen, making the world a better place return, and you define that as 1 + 1 = 11. What investments have you made in the green or clean energy space that have resulted in 1 + 1 = 11?
So where we have come to is we take firstly the investments that we have done following our theory is based on infrastructure. Because if you look at the current old industry, and I will talk about that before I head into the new industry, is that even if we were to continue producing more oil, there is enough storage capacity globally that can handle probably another 10 million barrels a day. The issue is no one has put that level of investment into the green energy. So no one has upgraded the actual grid, which is why you had this huge issue which happened in the UK last week. You've got issues globally whereby people have not updated their green energy network or infrastructure in line with where it should be based on where demand. So we're actually right now looking at what we're calling grid parks in certain areas. I lived in Poland for 11 years. That's a country that I know extremely well, and that's a place where we're currently embarking on a green infrastructure storage out there, because we believe that it sits in a very strategic location between Russia and the rest of Europe. So this is where we've been spending a lot of time. And for us, population growth drives where we believe infrastructure demand is going to come from.
If we jump into the new technologies, which Suresh, you mentioned earlier, so let's leave solar and wind aside for the moment and think about storage and increasing battery capacities. Where do you see that market going? Should we all be jumping on the bandwagon? Because we hear, I don't know, 3 pitches a month when it comes to battery storage and technologies. I wondered what your views were, Suresh.
I wouldn't put it as jumping on the bandwagon, but I do think that there is an empirically evident gap in the market of capacity and generation versus storage, particularly in renewables, even if we leave aside the source of that power, whether it's offshore, onshore, solar, whatever, hydrogen. So empirically, there is a gap, and there is clearly a need for investment in that space. So I think investing in businesses, enablers, technology, infrastructure, that all goes towards what do we do with the power that we generate before we have to turn that light on. When we need it, we need the power to come. I think is a very worthwhile pursuit, at least from an investment, a thematic perspective, and that's how we look at it at the moment.
And Bart, you'd said to me previously that if we had a pie chart and we said, okay, 40% of energy will come from electrification, then what do we do with the remaining 60? Or is it the other way around?
It was that way around.
The
It was
other
that
way
way.
around. Sorry.
It's about, so of the total energy consumption, about 40% can be electrified, like
Right.
buildings, cars. The other 60%, we need to find another solution. And you mentioned already, I think, Suresh, the hydrogen is an example. But hydrogen is a perfect example of what Manoj was talking about, the lack of infrastructure. We have an oil and gas infrastructure that has taken decades to build. It's with the refineries, with the pipelines, the ships, it's all there, not a problem. But now we need to switch it into something else. And the hydrogen can take up to 20% of that the other 60. So it could be a significant player in actually addressing some of the needs, specifically the hard-to-abate sectors. But there's no infrastructure in place yet. Let's be very clear. There is very little, we can produce it in Saudi Arabia. If you look at the projects at NEOM, if you look at the investments ADNOC is doing, Mubadala, QP, take your pick. The whole region is investing in hydrogen. The only thing is, nobody's investing in the infrastructure that comes afterwards. And how do you get it to a client, a steel plant in Europe or the US or in Japan? And how do you, not only the vessels, but also storage space and everything else? And that's, I think, a fantastic opportunity for solid long-term investments, because it's about creating that new economy, but still, it's not going on a whim. It's actually building something lasting.
If we go with that point on hydrogen, and from the very little I know about it, it's very difficult to move from one place to another. Things will blow up. So if we're talking about infrastructure, Manoj specifically, will hydrogen result in very local investment opportunities when it comes to infrastructure? Because presumably you need to make it and keep it very close to consumption. You can't be shipping it around the world like on LNG sort of equivalent ships.
So I think I go back to 2 words, which is energy security. So what's happening is now, based on the fact that the current globe is going through a de-globalization process, I think countries are going to become more selfish with what they actually generate. And they are going to ensure, for political reasons, re-election reasons, whatever reasons out there, they're going to want to make sure that they can provide energy for their entire teams locally and regionally before they even send anything outside. So I think the actual appetite to invest into a hydrogen, sort of similar to what the LNG industry went through, I think we're years away, because I think people's mindsets are, you better feed us first before you feed anyone else. And if you do not feed us, you're going to have a serious issue on your hands. And I think that plays a lot into every leader's energy policy. So first is, we will build and we will ensure that our grid is 100% able to take care of hydro, wind, solar. Hydrogen requires a significant amount of talent. We've also heard that talent is not as movable as it used to be. So these are things that now people are, in my view, one has to take into consideration. And I actually think the hydrogen game, I think it's a long way away based on what's happened in the world over the last 12 to 18 months' time.
Well, now I'm even more confused, though, because if you read the news, you've got headlines like Airbus announcing they're going to use hydrogen as a fuel. How's that going to work? And I'm going to start with Bart on this one, because I know aviation fuel and efficiency is something you've looked
I
at a
wouldn't get
lot.
on the plane.
No, it's like, I think, first of all, when you use hydrogen to make sustainable aviation fuel, it's not the hydrogen you put in the plane. You use hydrogen and CO2 to make kerosene effectively. So don't worry, it's not that unsafe. And you see some of the pilots happening here in the region. But I think, and I understand where the point is coming from hydrogen, because people don't understand the scale that is needed, the investment. So if you look at currently the largest project in Europe, North H2, which is a partnership between Equinor, Shell, Gasunie, and a couple other ones, that's literally enough for 1 to 2 steel plants. 1 to 2. If you really want to transform the economy, you need 100 of those projects. And the question is, and that's, I think, you made the comment about the population first, feed me first, is I think the major challenge with the energy transition is, do people realize how much it's going to cost to basically get rid of the old infrastructure, not use it anymore, and build new one instead? That's going to cost a lot of money, and the question is, and I think that's where the argument Manoj was making, is to which extent people are willing to do that, to make that sacrifice. But that being said, I think, yes, it will take time, but I still think that hydrogen is a fantastic opportunity. So I might be a little bit more optimistic than Manoj is.
But how do I access that opportunity as an investor? If I want to invest in hydrogen, not a retail investor, obviously, but an institutional investor, a private equity fund, even a pensions fund. If this is such a long-term investment opportunity, it's so attractive. How do we access this today with such few opportunities around and no way to store it?
I think one has to take a step back and look at first that who are the players in this space? Meaning, do you have the correct technology that is vetted? As you said, this is flammable, right? This is not something, and as a simple example, ADNOC just spent $19 billion upgrading their entire oil and gas infrastructure. So I don't think if we were to go to them today and say, here's a $2 billion or $5 billion investment in hydrogen, I'm going to get their attention. They're going to want to say, we have huge reserves here. We have spent the entire infrastructure. We're now going to make sure we exhaust those reserves. But at the same time, because they do want to be perceived, and everybody else does, with a ESG footprint, they will invest in the right teams that can understand hydrogen and bring that and have a technology transfer here. So I think we're still, in my view, probably 24 to 36 months away from understanding how to actually do this. It's a great idea. I just think, as Bart said, you need a lot more scale to get it economically viable.
If I could just jump in, I mean, when it comes to investment opportunities, like everything, there is an evolution and a process. And as we know with hydrogen, there's blue hydrogen, green hydrogen. Obviously, that's the gold standard. But today, as hydrogen becomes more front of mind, as people start thinking about how to invest in it, as governments start thinking about policy, there is a halfway house where things like carbon capture technologies that go into transforming sort of gray and brown hydrogen into green hydrogen, those are opportunities to invest in today as an investor, because there are technologies being developed. There are companies looking to develop infrastructure in certain parts of the world. I mean, just the area that we know best, which is Asia, if you look at that part of the world, there's been, I mean, it's a big signal, and people shouldn't ignore it, but the Chinese government has included hydrogen as an industry in their 14th five-year plan. Now, they don't just do that for fun. They're doing it because they know how important hydrogen is going to be for their economy, maybe in the next 100 years, but the point is it's in there now. And, there's over 50 projects that have been announced, about $500 billion of investment over the next 10 years that's been announced. So, you can see things are moving in the right direction. So if you're an institutional investor and saying that thematically I want to play hydrogen as maybe one bow, one of the bows that I'm playing in clean energy, there are accessible opportunities today, but they may not be in green hydrogen necessarily. They may be enabling in technologies, for example, to get us there eventually. That's how I would look at it at this point.
I'm going to ask a question that might be a bit controversial because it's obviously a renewable energy panel, but to your point about countries being selfish and really investing in where their forte is in terms of energy production, the world still consumes 98 million barrels of oil a day. The UAE contributes near 12% of that, if I'm right. Should the UAE just focus on that? Why worry?
No, I think it's about balance, but I think they have an obligation to everyone here that they have invested so much of their previous surplus into upgrading infrastructure that why would you suddenly write that off? You can't, that's not prudent. So prudent is you develop both, you focus on what you have, but at the same time you develop a very tangible footprint into the green renewable space. You have seen it here. There are solar farms here. There are wind farms coming up here. I mean, the UAE's even set up a nuclear plant. I mean, it is here, right? Because for them, it's about optionality. You need to have optionality because you never know what is going to happen, and they have a population to feed that relies on this. So I think they're actually doing the most prudent thing. They're keeping all their options open.
I actually think they will invest quite a bit if you think specifically we use hydrogen, but also downstream oil and gas, petrochemicals. One of the reasons I think they invest is not in hydrogen, it's the question around, and Suresh mentioned blue hydrogen. Because if we want to transition eventually to green, to renewables, blue is the transition. And we need that for a long time, actually to scale up to a certain level. But if you then take the lens of the oil companies here in the Middle East, that's actually a leash on longer life. Because what is the question? It's like we are in an energy transition. There will eventually be, they will be phased out. So what are you trying to do as an oil company in this region to be the last man standing? How do you be the last man standing is by producing the cleanest and cheapest oil. And I know clean sounds a bit weird, but it is. And the other one is to make sure you have route to market. Now, what is one of the ways to make sure that your product can be sold for a longer time is produce hydrogen, produce chemical products. Because if you just try to push pure crude, you're probably the first one to drop off the market. So a lot of them do it here it's a leash on life. It's about yet another 10, 20 years of selling your product, which fits with the mandate they have towards their countries.
So if I were to give you one choice going forward, to invest in one of three buckets: clean oil, for lack of a better description, storage and infrastructure around hydrogen, whatever electricity, however it's made, or hydrogen production, where would you put all your eggs and why? I'll start with you, Manoj.
So I don't know if I would put all my eggs, but I would put definitely 80% of my eggs into clean oil, for sure. And then I'd go 10-10. Or even, I would put a significant amount of it into the oil business still.
Into the oil as well?
Absolutely. Yeah.
I want to add one that you didn't mention, carbon capture and storage.
I was leaving that till the end, but that's fine. You can bring it into the
one.
portfolio.
That's the one that I would put my money in right now.
Carbon capture and storage.
Yeah.
And Suresh?
Some of my investors are sitting in the audience, so trying to explain clean oil to them will be quite a long meeting, I think, because I don't understand it. No, jokes aside, I would invest in infrastructure and anything to do with infrastructure and storage, because one of the good things about, for example, sitting here talking about electric vehicles, batteries, and so on, these are existing technologies which have been invested. The technologies work. There's a demand for it in the market, and yet people are scratching their heads saying, okay, now how do we get all these cars to get charged, as an example, or where do we store energy that we're producing already? So the opportunity to invest today, I think, is in infrastructure, at least from my perspective, because that's the bit of the value chain that is underinvested relative to the source and generation of power and the usage of it.
And should we be focusing on a particular geography, given the choice you've made? I mean,
I'll let you get one guess as to which geography I would focus on. Well, obviously it's Asia, as far as I'm concerned, not to the exclusion necessarily of the other parts of the world, but it's just a massive opportunity. It is the most aspirational region in the world when it comes to being clean energy driven, and yet the most underinvested. And there's this massive chasm that exists, which has to be filled over the next, well, certainly centuries, I think. So there is a huge opportunity there as far as I'm concerned.
So Asia, Bart?
Regions, Africa.
Africa.
It's, if I look at where they are today, if you look at the energy consumption per capita, the growth they're going to make, and at the same point in time, you have a fantastic opportunity to actually leapfrog, because there is not a lot of existing infrastructure, so you can actually skip a lot of the old or dirty economy and directly go green.
Manoj, final call.
I think, I mean, Africa, Asia, and I quote Nuriel today when he called us the Chindians, the 2.5 billion Chinese Indians. I mean, that's a huge market right there, right? And you got Africa at another 1.5. You got the world covered. You got more than half the world covered right there. You don't need to go anywhere else. And there's a reason why Reliance just invested into their solar project recently, writing a huge check to get global tech on renewable energy. So I think follow the numbers, population, that's it.
I think I'm going to follow you three for the next 5 years when it comes to renewable energy. So thank you very much for your time. Thank you, AIM, for having us. I'll hand over to Sarah.
Thank you, Maral.
Thank you. Thank you, Maral.
Thank you very, very much, Maral. That was absolutely intriguing. I was just learned so much on that last panel. It's one of my favorite topics to find out about, so thank you for that. I don't know if you've got any further questions based on so much information that you gave us, so thank you so much for that. Any questions from the audience? Yes, we have a gentleman over here on the left, please. Just one question.
Hi, my name is Carl Sarkans, and we're a group of investors from Canada. What hydrogen infrastructure is needed, and what has already been developed and is close? Like, can you identify specifically what is necessary in that field?
I think there's very little developed until now. If you look at where we are, we're talking about proofs of concept, pilots, technology investment, very much not an industrial scale. And because we talk about, like I mentioned, the sustainable aviation fuel, the pilot that's running right now in the Middle East, it's a pilot. It's really, if 4 or 5 planes take off, it's gone. Let's be very clear, it's a very, very small quantity, and that's what you see across the board. The only big projects coming into play, we're looking at 2024, 2025. So, and that means that the infrastructure isn't built yet. And that means that, and that goes across the whole value chain.
Yeah.
The question is to figure out which are the regions that are going to go first. Is it China? Is it Japan? Is it the Europeans? Because that's where you can find out where the great opportunities are. But if you think about what is in place already, nothing.
Yeah.
That's the easiest answer.